Today, we're diving into a really powerful idea that you hear a lot in Bitcoin circles. But honestly, it's about way more than just crypto. It's about how we think about money, value, and, well, all the stuff we buy.
I mean, come on, who hasn't wished for that? That one secret trick, that little hack that could just fix everything financially overnight. It's a feeling we've all had, and it's right at the heart of what we're going to talk about.
So, that desire for a shortcut, that constant search for an easy way out, the source material we're looking at today says that's not just a distraction, it's the actual problem.
This quote just nails it, doesn't it? When people ask for financial advice, a lot of the time they're not really asking for wisdom. They're asking for a cheat code. They don't want the lesson, they want the lottery ticket. And this whole philosophy we're exploring, it meets that question with a very, very clear answer. No. There are no shortcuts. In fact, even looking for one means you're already on the wrong track. Okay, so if chasing shortcuts is a dead end, what's the real issue here? Well, according to this point of view, it's not our ambition that's the problem. It's the game itself, the very system we use to keep score. And to get what they're saying, we've got to be on the same page about the fiat system. It's just a term for the money we all use every day. Dollars, euros, pesos. Its value comes from trusting the government, not because it's tied to a pile of gold somewhere. Now, that is some really strong language for sure. But it gets to the core of the argument, that our current money system has basically broken a fundamental rule of cause and effect, this natural balance that should exist. So here's a great way to picture it. This is the central metaphor. Think of the entire economy, all our jobs, our inventions, our services, as one giant planetary scale game. And money is just the scoreboard in that game. And this is where it gets really interesting. In a perfect world, the points on the scoreboard, your money, would be a direct reflection of the value you created for other people. Simple, right? Your lifestyle is earned. But the critique here is that our scoreboard is broken. Points can just be added to the board without anyone actually creating new value, which means it's possible to consume way more than you create. That fundamental link is just gone. All right, so if the scoreboard's broken, how in the world are you supposed to play the game? Well, this philosophy offers a solution that's actually surprisingly simple and personal.
It really just comes down to these two things. First, you focus all your energy on becoming more valuable to the people around you through your skills, your work, whatever. And second, you make a very deliberate choice to live humbly and use up less than the value you put out into the world. It's all about making that gap between what you create and what you consume as wide as possible. And that gap, that's everything. That surplus, that space between your output and your intake, that is your savings. From this perspective, that's your true wealth. It's the piece you've actually earned and can now hold on to. And this leads us to a pretty powerful analogy for saving your money. Instead of some get-rich-quick scheme, saving is like building a house, one brick at a time. Every little bit of value you save, what people in the Bitcoin world call stacking sats, is just another brick in your financial foundation. It's slow, it's humble, and it's deliberate work. This all sounds pretty solid, right? Almost a little too simple. It's a compelling personal philosophy for sure, but we've got to ask the tough questions. Does this really work for everyone in every situation? I mean, let's be real. For someone who's already working 2 or 3 jobs just to keep the lights on, is telling them to just be more valuable actually helpful? Or does it kind of ignore the massive hurdles that so many people are up against? And on top of that, if we focus so much on what each individual has to do, are we letting the bigger economic systems off the hook? Things like inflation or wages that just don't keep up. Can one person's discipline really win against a game that feels tilted? And then, of course, there's the tool itself. Choosing to store all your hard-earned savings in something as famously volatile as Bitcoin, wow, that is a huge risk. Can you really build that brick-by-brick house on a foundation that shakes that much? These are serious questions, and there are no easy answers. Now, those critiques are super important and valid, but let's just park them for a second and zoom back in on the core idea. Because even if you disagree with the method, the shift in mindset being proposed here is pretty profound. At the end of the day, this whole thing isn't really just about Bitcoin. It's a call to fundamentally change how you relate to money, To stop seeing it as something to be spent as fast as you get it and start seeing it as a token of value you created, something that's worth protecting. It's really a return to first principles, right? Live humbly, don't spend more than you earn, and make sure your lifestyle is paid for by the real work you do, not by just getting lucky in the market. It's about grounding your entire financial life in your own productive effort. Which kind of leaves us with one last question to chew on. When you look at your own money, what do you see? Do you see a tool that you're using to build something for your future? Or do you see a bunch of trophies from things you've already bought and used up? The answer might tell you a whole lot. So that's our look at this really powerful financial idea. By the way, if you want to check out the original source for this analysis, you can find it in the description. And hey, if you found this valuable, please follow, like, and share the What Bitcoin Taught Me podcast. You can also follow us on Twitter/X, Nostr, Blue Sky, Threads, Instagram, Facebook, LinkedIn, Spotify, and now YouTube. Thanks for tuning in.